Okay. Good evening, folks. Thanks for joining this episode of our trading webinars. Today we'll be talking about Heiken Ashi trading strategy. For the past few weeks, we have been doing a lot of technical trading webinars. Initially, we started with Fibonacci retracements. Then we did Ichimoku trading system, and then we did flatline trading strategy, and today we are doing the Heiken Ashi. Okay, the goal of this webinars, all of them, is to give you enough information so that you can make an educated decision about your trading strategies, like about your trading entry and exit points based on these strategies. Okay, so that is the goal of this. So let's move on. Before we move on, I wanted to bring the disclaimer. We are not in any way professional, not recommending anything. We are just teaching here. So this is for you. Just wanted to bring the disclaimer out so that we all are on the same page. Okay, let's move on to the agenda. First, we'll start with introduction, why we are talking about Heiken Ashi today, followed by a comparison between Heiken Ashi and the candlesticks patterns. And then we'll talk about the trends. How do we identify the trends with Heiken Ashi? As you saw on the title page, Heiken Ashi is very good at identifying and staying in the trends. Okay, so we'll talk about how we can identify a bullish trend, how we can identify a bearish trend, and how we can identify the reversal or the continuation of the trends. Okay, that's what we'll talk about. And after that, we'll talk about the pros and cons of it. As with any indicator, right, it cannot be used alone. But what is it that brings to the table? Now, what are the pros of using these candlesticks, and what are the cons of it, right? Definitely that we want to talk. And finally, but not the least, we'll talk about how to use Heiken Ashi effectively so that you can make educated decisions and make consistent returns on your trades. Okay, let's move on to the next slide. So we all hear these things, right? Hey, trend is your friend, trade with your trend, right? But how do we identify this trend? Like, you know, the stocks are going up and down. How do you know that a particular stock is in a trend, right? That is one of the best ways is through the Heiken Ashi candlesticks. So Heiken Ashi is a candlestick that is used for identifying trends.
Okay. Hey Srini, Hey Srini, I think there's some folks waiting in the room.
Oh, sorry.
No worries. Thanks, man.
Okay. Thanks for letting me know, Diva. Yeah. So one of the best ways to identify and to stay in the trend is through Heiken Ashi candlestick. In the next few slides, we'll be seeing how we can identify these trends. And also finally, we'll look at some live examples, how it works, okay? So the next, what is Heiken Ashi? Heiken Ashi is again a Japanese technique. If you remember, Ichimoku was also a Japanese technique. So this is a Japanese technique based on the candlestick theory. For folks who are not aware, even candlesticks was by Japanese. Japanese are pretty good in identifying all these patterns. So they extended the candlestick theory to determine the trends, to determine and identify and stay with the trends. So what does Heiken Ashi mean? Heiken means average. Ashi means pace. That means Heiken Ashi means average pace of prices. That means they take the average of the prices. So it is something like a moving average, but it is not exactly the moving average. So if you look at, you're going to look at further how it looks, but for right now, it looks like a candlestick, okay? It doesn't look anything different from candlestick, but their open, close, low, and high are a little different. If you look at the formulas here, the open is nothing but the open of the previous candlestick plus the close of the previous candlestick by 2. That means it is the average of the previous, close, and open. Then the close is nothing but open plus high plus low plus close by 4. That means you are taking an average of all the 4, okay? Then high is highest of the high, open, close of the previous candlestick. Low is again lowest of the low, open, close of the previous candlestick. So if you look at it, every candlestick that is determined for today is dependent on the previous candlestick. So it is not like independent like in candlesticks, right? So let's move on to the next slide. See, Heiken Ashi is candlesticks, right? Candlesticks are independent. They are like, if you have, for most of you who have looked at candlesticks, who have been doing trading for a while, we know that candlesticks are independent and they have no relationship with the surrounding candles. Green, when does a candlestick is green? When the closing price is above the open price. Red, when the closing price is below the open price, right? Now, Heiken Ashi candles are related, as I showed you. It depends on the previous candle. Like in your time bar frame, if you are on the daily chart, it's dependent on the previous daily bar. If it is on a weekly chart, it is dependent on the previous weekly. It is available on all time frames. So if you see here, Heiken Ashi candle will be green when the closing price is above the midpoint of the previous candle. So this is like very critical, guys. That is why it is called average. It is always averaging the open and the close, right? So the green, the closing price is above the midpoint of the previous candle because our open is average of the previous close and the open, right? That's what it's saying. So red is closing price below the midpoint of the previous candle. But one thing to note here is this looks good. It lets you keep in the trend, but the Heiken Ashi signals are very delayed because they take the average. When they take the average, what happens is it is a lagging indicator. It doesn't tell you the price action immediately, that it is going to go down or not. Whereas in a candlestick, let's say, for example, we'll look at it later, the candlestick goes up and then it comes down and becomes red on the same day, right? So that doesn't happen in a Heiken Ashi very often. Heiken Ashi is like, it always takes the average, and if your price is above than the previous one, it will show you still as green, but the next day it could become a red. So you will be delayed. So this is very, very important to know. It's a very delayed signal. So you have to be very, very careful to not to use in day trading. Because in day trading, if you're doing a 1 minute chart and if you're delayed, you might end up losing your profits, or you might end up in a loss even though your trade was profitable. Any questions so far? Okay. I know it's been very theoretical so far, but we have some charts and we'll be looking at it. Okay. Just wanted to give this intro. Okay. Now we'll talk about the trends. Bullish trend. Bullish trend are recognized by green candles with big bodies and long upper shadows and no lower shadows. This is very, very critical, guys. Even like candlesticks, they can have like, they call the wicks or the shadows, right? So if the wicks there is no wick in the bottom, that means, and there's only a wick on the top, and there's a considerable size of the body, then you can consider it as a bullish Heiken Ashi candle. Now, when do you consider it to be in a trend? You consider it to be a trend when you have at least 3 green candles. Okay, in this case, if you look at here, I'm trying to show you, you see here, you see you see this is the 3 green candles, right? After this trend has been going up and up and up. This was with N-phase, the solar star. You see that it has been going up and then it is consolidating here and it went up here again. And look at this, it formed a 2 red candles, but this is not let me talk about the bearish trend. But for right now, you have these 3 green candles and it gives you a trend that the trend is going up and it went up, okay? And it's been going down. When I meant by the trend, it is saying that the stock is going up, but it doesn't tell you, hey, it's going to go straight up or something. You are saying that the trend is still positive, it's still going up, and this works about 80 to 90% of the cases. There may be, as with any other indicator, it is not like 100% foolproof. Okay? So you wait for at least 3 green candles as mentioned above for confirmation. Now, let's move to the the next one. Hey, why am I not? It's telling me to save this as a PDF. Why am I not able to go to the next slide, guys? Anybody can help me here when I did the annotation?
Srini, are you like editing the Zoom
Yeah.
thing?
Then how do I get out of that editing mode? Okay, let me try that.
All right.
I got out of it. Okay.
All right.
Bearish trend. Bearish trend is again recognized by red candles with big bodies, long lower shadows, and no upper shadows, right? So this is again, if you see here, this is how it is, right? You have these three candles from here. Let me show you this one again. If you see this one, these are the three green red shadows, and it has been going up, and then it has been consolidating and has been going down. So these three red candles will give you an idea that it is going down and down, right? So the trend has been intact. But in between, you have one green candle and the dojis and all those things. In a minute, we'll be talking about what doji means, but you can see that the trend is continuing here until you see the bullish trend happening, right? So that is what it is. So now let's go to the next slide. Reversal or continuation of trends. You can see this change of trends can be recognized by dojis having small bodies with considerable upper and lower shadows. So what does it mean? These dojis are just telling you, giving a warning that it can be either going down or up or continuation of the trend. So these dojis will happen for a lot of days sometime until the next bullish signal comes up, right? For example, look at these two charts here. On the left side, you have the red candlestick. It keeps on going down, and then we had a one green candle here. But again, it doesn't show the bullish confirmation because this is just one candle. And then we had a series of dojis. You see the dojis are the ones with small bodies with the wicks on the top and the bottom. And then it went down. It kept on going down. See, this is how the trend goes. So you could have made quite a good amount of profit here if you had stayed in the trend. Similarly, on the right side, I gave it one for the bullish trend. Look at this. These are forming bigger bodies, and then they're going up. And then what is happening is here you formed a little bit dojis, right? And then it kept on going up. You see this candle, the hollow candles, and these things, and it kept on going up. So once you form this, if you are staying longer in this trend, it works. That's why it's very important. Heiken Ashi works for longer time frames better than the shorter time frames because it takes time to build that trend. Okay. So any questions so far? Folks, any questions so far?
Yeah, I have a question.
Yeah.
Regarding the wicks or shadows, the long upper wick generally signifies that there's a high amount of selling pressure, right?
No, that is for the candlestick. This is Heiken Ashi, remember? So the candlesticks for Heiken Ashi is totally different.
Okay.
It's average bar prices. It's not like candlesticks.
Okay.
That's what I've been telling, like, that will tell. So if don't make decisions that you make on candlesticks on the Heiken Ashi charts because it is an average bar price. I think you missed the first part. Heiken Ashi is nothing but the open of the Heiken Ashi is an average of the close and the open of the previous bar. It is not like based on pure open and the close. Okay, that's what it is.
Okay. Okay, thank you.
Please, okay. So anybody else, any questions? Shall we proceed or? Okay, I'll assume that's not many questions. Okay, so if you look at this, right, this is a chart of Apple. And look at this trend recognition, guys. It's very easy to recognize the trends on a Heiken Ashi chart. I've taken a weekly chart here to just show you. It's very easy to recognize trends based on size, color, and direction on Heiken Ashi charts. If you look here, the first three bars, I'm just trying to show you here. If you see here, the first three bars are like here. And if you had waited here and you had gone with this trend, you would have gone up to here. And that is like from a price that's a long way, right? It was on an upward bullish trend for a long period of time. And then it went on a bearish trend. But where did the bearish trend start? The bearish trend was, this is a doji and this is a doji. And you see here, the bearish trend was here. By the time it formed the three bars, it started its uptrend again. So I would not have traded this one bearishly because by the time I had the three bars, I had formed a doji and then it again started its uptrend. So if you look at this, though there was a decline in the price, Heiken Ashi was telling you to stay in the game, and then we are again raising it back. So it helps you to keep you in the trend. The bigger the time frame, the better the results are. But having said that, it works also on the daily, but it works much better on the bigger time frames. Any questions, guys, on this? Okay. Okay. Now, the most important thing which we have to all understand is Heiken Ashi pros and cons, right? If you look at a Heiken Ashi chart, it will be very smooth. That means there will not be like a choppy action. Even during volatile times, you will not see choppiness. You will see either it is on the trend or it is away from the trend or it will be a doji. That's all you'll see. You won't see those big reversals like one green candle and one red candle. Those kind of things you wouldn't see. Then it's very easy to recognize trends, especially in the long-term charts, daily, weekly, and monthly. Then third thing is it's very easy to stay in the trend, not getting carried away, especially long-term investors who are looking to look for that stay in the trend for a long time. Those people. And the fourth is like it's available on all time frames. So it is available even on the 1 minute chart, the 2 minute chart, but which is not recommended, but it is available on all time frames. And it's also supported by all the platforms. Most of the major platforms like Thinkorswim, TC2000, everybody should support this. Then the cons, delayed signals can hurt during reversals and can take away your profits. For example, if you are running on a huge profit and then you see, hey, this is going down, and by the time the actual reversal comes in, you will be like losing so much of your profits. So you cannot use this to take your profits, right? Basically, you want to chip away your profits using the regular charts and using other technical indicators, okay? Then the second thing is actual closing price is not displayed on Heiken Ashi. This is very critical, guys. As I mentioned, the close is nothing but, and the close and the open of the candlestick is different for a Heiken Ashi compared to a regular candlestick. So you might be thinking, oh, I am like on the price that you see on Heiken Ashi is not the actual price. So you have to be all the time aware of that. And you should use additional charts to display the actual closing prices. Third thing, there will not be any gaps shown on Heiken Ashi. For example, let's say the other day pins gapped up, that you won't see those gaps. Everything is smoothly driven. So if you are looking to trade some strategies using like gap ups and gap downs, then this may not be the right, then you may not be able to do it with Heiken Ashi. Okay. So these are some of the pros and cons. Now let's look at some of the realistic charts and see how they look. What is that something that you guys want to look? Any trending charts? Anybody?
You can check dark Q.
Dark Q, okay. To see dark Q.
or crowd
Oh,
strike.
sorry guys. So, okay, the dark hue, what happened here? Based on this, if you see here, it has this formed a trend here, three bars, and this is where, and then it went down. It formed, it kept on going 3 bars here, and it's on a downtrend, and again it formed a 2 bars, and it went into downtrend. It came back to the candlestick. But having said that, there is a possibility, but as I mentioned, you should not use Heiken Ashi alone. But if you use Fibonacci here, let's do Fibonacci here and see how it looks. Ideally, I wouldn't draw on this, but let's see how it looks. So it has just come in and it is trying to go up because the time frame is very critical, right? It has a lot of time left. So it has a possibility of going 280 or 340. But when will it go? That's depending upon the time. And its earnings are on December 10th, I believe. So
December 3rd, I guess.
December 3rd. So first it has to cross this cloud and it should go up. So one thing which is a little bit worrying me is the lead span B is above the lead span A. So it is showing a long period. So let's see if it's crossing somewhere. I'm trying to see if it's crossing. So it's not crossing anywhere. It's staying below. So we have to wait and see if some price action will take this above. Okay. So it is looking like a flat line here, the lead span B. Whether it will stay above it or not is the first question we have to look at. But it is again formed of 1 bar. If it forms 3 bars, then we want to be a little bit cautious on this. Okay. Yeah. Anything else?
Srini, can you check Zoom?
Zoom. Okay. Zoom. Zoom is looking really bad in the sense, you see here, these 3 bars are really downtrend. You see this? The really downtrend, it went in with no upper shadows here. And then again, guys, today I'm only talking from the Heiken Ashi perspective. If you want, we can talk about it more. But these are Heiken Ashi candles. So just I wanted to show you that. So it went a little bit up and then it fell down again. So if you see here, as I was mentioning earlier, it has a possibility, if it crosses the cloud, the first stop will be 382, and then it can go back for the earnings at 464 and then fall down to 268. There's a lot of gap ups here, so it can go back to 268 Zoom. So Zoom has the potential to fall down for earnings on November 30th, I believe. Again, we have to see what happens. Does it stay above the cloud or below the cloud is the question. Anything else, guys? But did you see this? It went in the trend here. If you see before it fell down, 1, 2, 3. If 1, 2, 3. If you had bought the Zoom here, these prices are wrong again. But let me see. This is 490, 193 showing. But if I go here and see the same price on my regular candlestick, bear with me, guys. 3. What's the price? I don't know where it's on. 434, you would have ridden it up to 529. So that is the thing. It was showing up the 3 candle bars and here. So one thing we want to be very, very careful on the Heiken Ashi. If you are looking for a clean uptrend, then look for without any lower wicks, right? That's for the uptrend. For example, you may say, hey, there's an uptrend here, but look at this. There is an upper wick and a lower wick. You don't want that. You don't want the lower wick to be there at all. And the body is also very high. The bigger the body, the better it is for the uptrend. Make sense? Okay. Anything else, folks? Oh, I wanted to show one of the picks in our, one thing that worked today is Gentex. this is where we bought it. 1, 2, 3. You see, this was the day when we bought that, I believe, on the third day. And it was at 28.37. From here, it picked up to 32.24. Okay. So it gave us a big 4 times 400% on this trade. And we bought it for 45 cents and we sold it for $2 today. So, I mean, these techniques, along with the other thing, along with this, what we saw is it was about the conversion, it was about the cloud, and then it was third day above. So that is, so all these things together gave us a very good indicator that this was going up. Okay. Similarly, you take SMA. SMA went in like, but it went 2 days above, 2 days bearish, then it went in, and then this is the third day. Then this one is like a 1 day it went down, and then it took the third day. So again, this is not completely bullish, but this was not used, but I was just showing you how these Heiken Ashi bars along with Ichimoku work so well. Another thing to note is Schwab. Look at this beautiful chart, guys. 1, 2, 3. Then it went 1 day down, and today it just sprang up. Anything else, guys, you want to see? One thing I wanted to talk about is HD. HD, we entered, this was one of the recommendations that we did. And it went three candlesticks here. And then today, 2 days, it fell down. But I still bullish that it could be, it could go above, it could go and meet the trend because it went 3 bars above. And also it has a potential to go to 297 as per Fibonacci. So it is close to getting to 300 actually. So the earnings is on November 17th, folks. Keep a watch on it. Okay, anything else? Hello, am I talking to myself?
No, yeah. No
Okay.
questions. That's what it is. So you're good.
Okay, good. All right.
One question, like whether it's this approach or candlesticks, how do you decide which one to leverage? And let's say if they're giving contrary views.
Again, as I said, you should have, we cannot use one technical indicators. If you look, we should have a system in place that takes care of these things, right? Just because it is 3 candlesticks above doesn't mean that it has the ability to go up, right? So you should use other things like flat lines, Fibonacci, which we have been talking about, and Ichimoku, all those things together. So candlesticks is like good. For example, if you look at this candlestick, this shows a very bad picture, right? It's an engulfing candle here, right? So if you look at this, this shows it as an engulfing candle, and it tells it's on a clear downtrend. But whereas Heiken Ashi is telling you that, hey, it's in a little bit uptrend. So which one? So it's at 273. So let's see. So you have to make the decisions based on where the stock is heading, based on looking at a little bit of higher time frames. For example, if you look at the higher time frame, this is the thing. So if you look at here, the HB, it was like it is rebounding from the average 20, moving average 20. So it is getting it is not like in a downtrend, right? It is in an uptrend. So, and considering that it has earnings and all those things, so you want to play again. Again, there is no definite answer saying that, hey, this is how you play, but you use all the possibilities against for your odds, right, of winning the trade. Did I answer your question?
Yep. Thanks.
So one thing, folks, as you become an experienced trader, you need to start looking at different time frames. seeing what is it indicating so that you can evaluate your risk. For example, you may start off with 4-hour, then you look at the daily, then you look at the weekly. So depending upon that, you can make a decision, right? That's what it is. Okay. Let me get back to the screen. Okay. So as you see here, delayed signals can hurt. Then gaps. So we talked about all these things already. So best way to use a Heiken Ashi. Heiken Ashi is very good at identifying trends, but it's not so good at indicating timely reversals. So we want to use other technical indicators and systems for exit points, right? Like Ichimoku, as we saw, it can be used well with Heiken Ashi to identify dynamic support and resistances. Then another thing is Fibonacci extensions, right? Fibonacci extensions can also be used to identify where the stock is heading, like we talked about in Fibonacci. Then flat lines and moving averages, which we already talked about. In a way, Heiken Ashi works like moving averages because it always takes the average of the previous bar. But in addition to that, if you use the flat lines, which will provide us the static supporters and the resistances, then we can, then at those points, we can chip away some of our profits. Saying that, hey, it has reached a critical point of support or resistance, let's remove some of them and let's play with only like the house money or the profits or something like that, so that you don't lose the money on the trade. So that's pretty much what I wanted to cover in the Heiken Ashi. So the final point what I want to make in this is learn to use Heiken Ashi effectively with proven technical indicators to identify and stay in the trend. Especially for your long terms, this will really help you. Swing traders, like the swing traders, it's really helpful if your time frame is 2 to 4 weeks. It definitely helps looking at the daily charts and the weekly charts. And if you are a day trader, I would not recommend this one because it's a very lagging indicator. So it may chip away your profits, okay? So use it only for long terms, okay? At least minimum daily. Don't look at it 4-hour or something like that. 4-hour is okay to check your trends, but don't use for those minimum day, like fast time frames. That is pretty much what I had to do. So, hey, Diva, can you take over this one?
Yeah, sure, buddy. Thanks for the session. Yeah, we included the services that Techie Investor offers, like Srini pointed out. Some of the paid subscribers are getting access to those picks through Telegram and are taking advantage of it. So let me see who all are on the call. I think most of the subscribers are on the call. So, but if there's interest, feel free to refer your friends and family if they're interested in subscribing to the service, and definitely share feedback on how the picks are coming along for you all. Last week has been a really good week, so that's awesome, and hope to continue the good track, and would love any referrals that you may give. We do have the subscription now available to the website, right? I know the first month we kind of use the Zelle option, but if you create your accounts on the website, you'll get access to some more services and blog posts and those kind of things. So check that out, and also added this 5-day trial offer for folks who want to try it out. Cool. Any other questions, guys? Cool, Srini. I think that's it, right? Is there anything else?
Yeah. Thank you. Thanks a lot for joining this. We will we have a recording of this video and will be available in the blog very soon. Okay.
Thanks, Srini.
Have a relaxed evening.
Bye. Thank you.
Take care, man. Bye.